Hi, everyone. Welcome back to All the Wealth. It's 2025. Happy New Year. If you're new here, this is All the Wealth. I'm Mical Jeanlys-White, CEO of Wealth More. And with me today is Jacob Stewart, one of our certified financial planners here at Wealth More. This is our wealth building channel. And today we are chatting about our military service members, and Jacob here is also a member. We wanted to make our first episode of 2025 one dedicated to talking about how we ensure that our service members are building wealth.
Great.
Jacob, before we get into wealth building, I'd love for you to tell folks a little about yourself and your own military service and that unique world of you being a veteran, but also a wealth advisor.
For sure. Originally from Oklahoma and joined in the military right out of high school and didn't want to go full time. I went into the reserves, kind of dipped my toe in it a little bit, and I joined the Marine Corps Reserve, and then I was in the infantry. A lot of people call me crazy, but I wanted to be a fighter. I didn't want to do support jobs.
Wow.
Went into the infantry voluntarily, and then this was during the Iraq War and the war in Afghanistan as well. I knew it was likely going to be deployed, and did deploy in 2009. I got activated in 2008 to start my build up, and then spent 6 months in Iraq and then came back.
Wow.
I was on active duty for about a year, and then went back to civilian life and the reserves, and then eventually got out in 2011. So I did 6 years total in the reserves. One year.
Wow.
1 year of that time was active. So I got to see like a little both sides, being active and service. And military as part of the reason I was interested in finance, because when I did deploy, you've got a lot of extra money. And so I started investing and started researching investments, started advising even some of my buddies on it. And so it really kind of sparked an interest in me, and one that I took and made into a career.
So tell us about that, from being active in the military, 6 years of service, and then making that transition to becoming a CFP.
Yeah, so for me, I would say it's a little easier being a reservist, because my plan was to go to school while I was in the reserves, and then I was working a civilian job as well. So it was easier for me than folks that are like active the whole time. Yeah. Now, they do have benefits in which if they're able to go to school while they're active, that usually gets paid for, where I had to rely on the GI Bill primarily for my education. But that's one of the good benefits. I guess we're jumping ahead and getting into the benefits there. But one of the good benefits we have as veterans and military members is that GI Bill. So depending on how much active duty time you do, you get a percentage of your tuition covered. And then they provide a housing stipend, book stipend. So it's a really good benefit. Yeah, being able to go after I left the military, then I went and got a master's degree, because I was doing my bachelor's while I was in. And then I got my master's in trust and wealth management, which allowed me to sit for the CFP exam and everything.
You know what strikes me a lot here is that it's young people that go into the military. Like, you're 18 and, well, two things. One, we wanted to do this episode because there are a lot of great benefits that go with being in the military. But the flip side is most of them go dramatically unused, underused.
Yes.
And a big part of that, I would imagine, is that the average 18-year-old doesn't exactly know what all of this means and how to take advantage of it.
Yeah.
And we know there's like no financial education taught in high school. So then you sort of have this like deer in the headlights, right? Like, I have a lot thrown at people.
Yeah.
And we know what happens when people have too much thrown at them. They do nothing because they don't know what to do.
Yeah.
Yeah.
Exactly. Yeah, there's incredible benefits, with the military. But like you said, a lot of people just don't take advantage for various reasons. But one of them is, how does this fit in with my overall plan and goal? And like, how should I achieve that? There's not a lot of guidance on that from within the military a lot of times. And the other thing is, like you mentioned, they're 18-year-olds, 19-year-olds primarily getting in. You do have some that are older, that are, late 20s, 30s. I've even seen some getting in at, 40s, but that's pretty rare. Majority of people going in the military are 18, 19, sometimes even 17. When I got in, one of my buddies,
Wow.
he had to have his parents sign for him, so he could enlist, and he was 17. So young people,
Yeah.
you don't always feel young. I remember when I got in, I thought I was a big person. I didn't realize how young I was. But
Yeah.
at that point in their life, most of them, they've been taken care of by their parents. Their finances have been managed primarily by their parents. They may have a little bit of spending money here and there. But then you go into the military and you've got a paycheck that's coming every 2 weeks. You don't have a lot of overhead because generally you're living in the dorms. So housing's covered. You're usually signed up for meals at the dining facility. So your meals are covered. So your paycheck is kind of fun money a lot of times viewed as, and
Yeah.
don't have a lot of probably money managing experience. And so it can get out of hand.
But it is this like really unique opportunity,
Mm-hmm.
right? To build wealth because you're getting a nice income and your expenses are super
Mm-hmm.
low. So if you can sort of like accelerate that wealth building and then you've also have the educational benefit. So for me, I am like, wow, like how can we help people sort of take advantage, right? Because the flip side is you got a lot of people in college that'll walk out with like $200,000 worth of student loan
Mm-hmm.
debt, and they now need to find like a ridiculously high paying job, and they still have the day to day living
Yes.
expenses. So for those that are serving us and we're so grateful for the service, how can we help them like ensure, like what would be your recommendation to help them like just
Take
take
advantage.
advantage of this unique
For
opportunity?
sure. Yeah. So yeah, it is definitely a really unique opportunity in that you have at a young age a lot of disposable income, which college students typically don't have. You go out of high
No.
school into college, you're buying ramen noodles and just barely trying to
Yeah.
get by. Where military member, most of their expenses are covered and they've got this check. It's not a big check, but coming in every 2 weeks, which is mostly disposable income. You might have a cell phone bill, car, insurance, but outside of that, most everything else is covered. And so if you're 18, 19 years old and you start investing that money early, the
Yes, which is what we
compounding,
want.
yeah, the compounding over
Huge.
40 years is massive
Yeah.
versus waiting until your 30s. You've already lost that first 10 years. It may only seem like, well, it's only one quarter, but it's the first quarter of those 40 years.
Yeah.
And that's the most impactful.
And most people don't start investing until like 10 years later into this. And they miss that sweet spot, right? And for military members, like it's such a unique opportunity, right?
Yes.
To if I'm hearing you, Jacob, you've got like educational benefits, which we definitely want people to take advantage of. And then there are some other benefits from like housing, right?
Mm-hmm.
If people are looking to buy a house, that can really help them on their financial journey as well.
Yeah. Yeah, so going back to education benefits, while you're on active duty, the military will pay your tuition. I believe they'll pay some other expenses, but primarily it's a tuition benefit. So if you want, and there's no, like a lot of companies may do tuition assistance, but they only do it for certain programs that might advance career within that company. The military is not that way. It's pretty broad. If you want to study psychology or you wanted to study something way outside your job field, the military will pay for it. There's not a lot of requirements that you have to meet to get the tuition assistance. And you can do that while you're on active duty. And then when you get out, you still have the GI Bill after.
Sure.
Yeah, so you could get an undergrad paid for by the military, graduate, and then go get a
And
master's or
Phil,
doctor or whatever with your GI Bill.
folks, I hope you guys are listening.
So that's a huge benefit.
One, yes, take advantage of every single educational benefit. I have family members that have served that have gone to med school through the GI Bill. Like, it's
It
real.
is. Yeah. And another kind of aspect of, so that's just general tuition assistance. There's also programs within the military that they run at different times depending on the need. But if you're going to a specialized field like law, medical field, they will actually, you can enlist. And then if you get into this program, you can actually get paid to go to school. You can go, you'll go to a regular law school. You won't be wearing a uniform, but you'll be getting paid like a military member at law school.
Yes.
But then you have to assign a certain amount of time that you will serve as a JAG officer after you graduate from law school. Now, if you
Yeah.
don't keep up grades and you don't graduate, then you are kind of on the hook to pay that back. But, you know, these
Yeah.
are huge benefits as well, that if you're planning to go into one of these fields like medical or a
Yeah.
lawyer, they will cover everything and you'll get a salary just to show up to class. And then you get a guaranteed
And
job
fees,
afterwards, which is a huge benefit. Like, not a lot of people are guaranteed a job once you get.
I hope everyone's like ears are like literally like pierced and at attention, because these are massive benefits that can, one, up your income because you can get that education, take advantage of the educational benefits, which can lead to even higher income paying jobs. And then, and getting that done without the sort of like traditional student loan burden that has gotten so many people behind on their wealth building activities. But then, even to Jacob's point, graduate with a nice paying job waiting for you.
Exactly. Guaranteed experience, you know, and you do your military experience and then you want to go back to the civilian sector, you have that on your resume that you've already been working.
As well.
So that's just the education part.
Yes.
So you mentioned housing as well. So of course, housing is covered in the military. So you get you can either stay on base or you can live off base and get a housing allowance, which that's a big benefit, because if you decided to purchase a home, you can get a mortgage, and basically the military is paying off your mortgage with the housing allowance.
Mortgage.
Yeah. And then there is the VA mortgage that comes for veterans and active duty military, which allows you to put down zero. You do have a VA funding fee, which is usually, I think, around 1% of the loan, which would be due like a closing cost. And that can be financed, I think half of it. You know, if you're buying a $300,000 home, it's a $3,000 fee. You could finance half of that on the loan and then pay the other. So the closing costs are relatively low and no down payment required. And the big benefit is, if you didn't have the VA backing your loan, you would have to get an outside insurance, private mortgage insurance to back your loan.
Like a PMI.
Yeah, PMI, the private mortgage insurance. Yeah. The way I explain it to people is, you know, the bank, they can only take on so much risk, and 100% loan is a risky loan.
Yes.
The VA, you can either get the backing from the VA that they're going to cover your loan if for some reason, you know, you can't make the payments or it gets foreclosed on. The VA is going to back it and make sure the bank doesn't lose any money. Or you can go pay a mortgage company or pay for insurance to cover your mortgage in the event that it gets foreclosed on. So one way or the other, the bank wants some kind of, if you're not going to put 20, they want some guarantee if you're not going to be able to put 20% down. And the VA is free. Well, there's just the funding fee, which is 1%, or the PMI, which is hundreds of dollars a month typically. Yeah.
Exactly.
Which is going to be a lot more than the VA funding.
So Jacob, are there, right now everyone is struggling with the high interest rates, and so many Americans are finding home ownership to just be unattainable right now. In addition to benefits around down payments and fees, are the VA loans at lower interest rates?
They can be. The interest rates with the VA loan will follow a typical loan as well.
Market.
Yeah, the market. Because there is less risk to the bank because of that VA guarantee, then they could potentially be a little lower than if you went with, say, an FHA loan and put 5% down. I think if you
Okay.
compared a VA to a conventional where you're putting 20% down, you might get even a lower rate with a conventional. So it's not usually the lowest, but it's definitely lower than probably a FHA loan
Yeah.
where you're putting 5% or something.
Yeah. So, guys, I hope you're listening. If you haven't been paying attention to these benefits, these are some of the most important things that help you build wealth faster. One, spending less on your education, particularly as you're funding education that can lead to high paying jobs. Two, getting into a home without having to put that 20% down is huge. That means you can buy more home and buy a home faster, which is pretty meaningful, as for many people, their home is one of their biggest assets and one of the first assets they get into.
Yes, for sure. And just sharing from my own story, my first home I bought was in Charlotte, North Carolina. I was out of the military at this point and decided to buy a home. And if I had saved to try to get the 20%, probably would have taken me a few years. And in that time, the house, so my first home was about 150, I think it was 154,000. So a nice little starter home. 4 years later, when I sold it, it was worth, I think, 225. 1 year later,
Nice.
325. Now, that's my mistake for selling it 1 year early.
A little too early.
This was during the COVID. So I sold it in 2020. From 2020 to 2021, it went up another 100,000.
Wow.
So that can kind of show you how housing can kind of get away from you if you're trying to save that 20%. Where if I had just waited and tried to save, it would have gotten away from me and I probably would have not gotten the 20. But instead, I was able to get into the house and then I got all that equity increase. Now, the housing market's not the same everywhere. Charlotte happens to be a very fast-growing city, but that's one of the big benefits is that saving can take a while to get to that 20%, or even for some folks might be hard to get to 5.
Exactly. And then if I think about this, because in the last episode, we talked about different investments and sort of the compounding benefit of those investments over time. And if you had to save, let's say, $30,000 for a down payment or $60,000 for a down payment, and you're able to leverage the benefits afforded through programs like the loans through the VA, imagine taking that $30,000 or $60,000 and investing it in the market. Wow. The home is also appreciating and you're getting the benefits of that as well. It's like putting your wealth in overdrive.
Yeah, and especially when rates are low. Like right now at 7% might not make as much sense, but the house I'm in right now, which I bought in 2022, I'll tell you the rate on it, it's 2.75. So you can't get much lower, lower than that. And so I did even though I had the money to put down, I said, when am I ever going to get a 2.75 again? So I'm going to finance 100%. And then I have that money, like you're talking about, that I can invest in other things. And, all that has to be is 2.75, and I'm already doing better than if I had put it on the house.
Jacob, you have no idea how many friends, family members, strangers that I try to encourage to take advantage of those super low rates when they were available. Because I think some of us thought like that would be
forever.
And those of us who knew better, who work in this space, were like, no, get it now, refi, like get to the lowest rate that you can. And I would tell folks like, hey, would you loan someone, $300,000 for 30 years at 2%?
Yeah.
And they would be like, hell no. I'm like, yeah, duh.
Yeah, like people didn't realize how good we had it. Like,
how good it was.
Yeah, it was right. Like, if you didn't take advantage of it, missed out.
It's not likely to get back there anytime soon. And And frankly, for those of you who got into those great rates, kudos to you. But I know for many of you who are trying to get in the housing market, hearing this probably doesn't make you feel so great. But the important lesson is to sort of be aware of your options, to sort of think about, when the rates are low and taking advantage of it, or even after you own a home, if the rate changes and goes down, thinking about smart ways to refinance so that you can get to the lower rates. And I think one of the biggest myths out there is people think that if they refinance, they have to take equity out. You don't, or they have to take cash out. You can literally refi just to get the lower rate.
Right, right. That's a little bit general, kind of guidance. If you're waiting for rates to go down, because I've heard this from people like, oh, well, I won't buy until rates go down again. Well, there's no guarantee that's going to happen. So get something you can afford. If you can afford the 7% or whatever it is right now, 6-7%, go ahead and get in. And if the rates do go down, you can always refinance. So you don't have to wait to purchase. Because the other thing that happens in the housing market is as soon as rates go down, demand increases because now a lot more people can afford and houses go up. So the house you were looking at, like, oh, well, I'll wait for rates to come down to get that house may be out of reach then when the prices go up.
Yes. So Jacob, we talked about the education benefits, the benefits towards home ownership. Does the military offer benefits around investing? Retirement accounts, is that something that's available as well?
For sure. Yeah. So the main one is the Thrift Savings Plan, which is the government's retirement plan across the board. Civilians and military all are in that same plan. The military has a specific kind of matching schedule within that plan that might be different than what some departments in the civilian side get. But for the military, as soon as you join the military, after 60 days, you're eligible for a automatic 1% contribution by the government. And that's whether you're putting any money in or not. That's a great benefit. And then if you're doing at least 5%, they will then match another 4% on top of the automatic contribution. But the matching doesn't take place until 2 years in service. Okay. So from 60 days until 2 years, you'll be getting 1%. And then after 2 years, it's 5%. And it's fully vested at that point as well. So if you leave the military any point after 2 years, it's all your money.
That is fantastic. Because I think sometimes we see this with folks in like 401ks, and they are leaving the match on the table. Maybe I should let you say it because I feel like I'll probably scream.
Yeah, so a lot of times people will say, that's free money that you're leaving on the table. And that's true. But even more compelling argument is I say that's money you're working for that you're leaving on the table. Like that's part of your benefit. Why are you going to leave some of the money you're entitled to and not get it
on the table?
On the table. So what I typically recommended for young service members, even before they were getting the match, I said, go ahead and put the 5% in. That way you're used to it coming out of your paycheck. Sure, you're not getting the match now. And yeah, they're going to put 1% in whether you do anything or not. But if you're already used to that 5% coming out, it's not going to be a struggle once you hit your 2-year mark and you start getting that match. And it's just more money in your retirement at a young age. So if you're 17, you're already 18, 19, you're putting 5% in. Like by the time you get out, it's going to be a lot more because you're starting.
Yes. And I'm sure there are probably some parents who might come across this episode who have young adults who are in the military and probably are like, what? There are all these benefits. Are they taking advantage of it? I encourage you, go nudge them. They are young. They do not have all of the financial gems. Feel free to nudge them. I mean, these are real benefits. And we know that people who are not in the military underinvest in the 401ks. We know so many company matches get unused. We have had folks that I myself have personally helped friends like set up their 401ks to get the company match, and they had been in these organizations for 5, 6 years and had never taken advantage of like 3%, 5% matches. And they're not retroactive. You can't go back and say, oops, I forgot for the last 3 years. Can I have it
Right.
back?
Once
No,
it's
it doesn't work
lost, it's
that way.
lost. Yeah, for sure.
You either take advantage of it or you don't.
Yeah, the nudges from parents is very helpful. When I was working as a
Yeah.
counselor, I would have a financial counselor with the military. I had some service members come in and be like, "All right, my parents, my dad, my mom, somebody told me to come in and talk to you. I don't know what I need to talk about, but I need to come in and talk to you."
Yes.
And that's very
And
helpful.
it is, right? Because a lot of times it's not knowing what's out there and then not knowing how, when you put all these pieces together, right?
Hmm.
Like how it can really set you up for
Yes.
success.
And that's what I always told the younger airmen that were just coming in. I had a class that they were required to come to. And so I always took advantage of that and told them, you're starting out your career, just small adjustments this early will make huge difference down the line. I used the like land navigation kind of metaphor where like, you make a few clicks here, you go out a few feet, it's not going to
Yeah.
make much difference. You go out a few yards, it's not going to make that much difference. Go out a few miles, a few clicks is going to put you in way different, position.
It really is. It really does. You know, it's never too late to start investing, right? It's never too late. But certainly if you can sort of see these opportunities and seize them. And it's why, like here at Wealth More, we talk about the community effect of, be it a parent nudging you or a friend nudging you, or you meeting with Jacob as he's counseling service members, or meeting with Jacob here at Wealth More. The knowledge and that little nudge goes a long way, and you'll be so grateful that, one, you took advantage of the 1K, you started investing early, you got the match, you took advantage of like a really nice like home ownership benefit. And when you start putting all those pieces together and you're able to have a bit of that financial breathing room, right? That financial peace of mind, it's priceless.
Yes, for sure. And then kind of to go back to some of the benefits with the TSP, they have options for doing both traditional contributions and Roth contributions, which is nice because there's different periods of your life where you may benefit more with one versus the other. And specifically for military, Roth can be really good if they're on deployment and they're in a tax-free zone. Any area in the world that's considered a combat zone, which a lot of the Middle East is still considered that, even though we're not actively at war over there, they're still considered combat zones over there. And so you earn tax-free income while you're in that zone. And if you're putting money in as Roth contribution, it's going tax-free in, and then we know in retirement, tax-free out. So that's a
Wow.
really big benefit to take advantage of. And then also while you're in the combat zone, this would be for higher income folks, but the typical cap, so I think for 2025, 23,500 is the max contribution amount for 401ks and TSP. But when you're in a combat zone, that goes up to around 70,000, I think. The first 23.5 could be put in as Roth. You're still limited Roth at that normal cap, but then above that cap, you can put in after tax because it's tax free. It's going in there tax free, but it's not Roth, so it won't grow tax free, but it's still going into the account.
Wow.
Then I found out actually today, as I was preparing for this podcast, 2026, the TSP is going to incorporate in-plan Roth conversion. So if you're in a combat zone, you drop 70K into your TSP, 23.5 of it's going to be Roth, and then the other amount, could be after tax, but then you can convert it to Roth.
To a Roth.
And then at that point, growing any amount that it grows will be tax-free when you take it out. Yeah.
Now, you guys know nothing gives me a bigger headache than the ins and outs of a Roth. This is why, if you're listening and the Roth gives you a headache like it gives me, particularly like the backdoor Roth,
Yes.
I highly recommend that you go to wealthmore.net. Jacob's Calendly is there. Schedule a call with Jacob and go through the nuances of this, because these are big numbers that you could be putting towards your retirement. And I know we use retirement all the time, but I like to just say towards building your wealth.
Mhm.
Right? Because when you have those assets, they're game changers. It's that financial freedom. It's the sort of, optionality of doing different things because you have the money to fund your dreams, your lifestyle, the things that you want to accomplish.
Right. Yeah. So that's exactly what I was explaining, was basically a backdoor Roth, which can be complicated.
Yes.
So it's always good to have a wealth advisor kind of walk you through those steps and make sure you're getting it done the right way.
Yes. There are two things that always give that I feel like my brain short circuits. Points when you're buying a house, and nuances of the Roth.
Yeah.
Like my brain's gonna short circuit because I would like to figure out who came up with the points,
Right.
but that's a whole nother episode.
Going back to the combat zone. So there is actually another benefit as well, just specifically for the combat zone. And this is geared more towards helping service members save, maybe more for like saving for emergencies or things like that, maybe down payment on a home or something. But they have what's called a savings deposit program. So when you get to a combat zone, after you've been there for 30 days, you can opt in. The max you can put into it is 10,000, but it does earn a guaranteed 10% while you're in the combat zone, and then I believe 90 days after when you come back home. So if you're deployed 6 months and then 3 months on the back end, you could get 10% on your savings for 9 months, or if you're deployed a year, whatever. So it's a good way for service members to save and get a good 10% guaranteed return, which you're not going to find in any saving. No savings account's going to pay that these days.
No. I have so much gratitude for those who serve, and with that sacrifice, I just firmly believe folks should enjoy financial security, financial upside. And I wanted to do this episode because I felt that it was just so important that, one, we highlight these things if people are not thinking of them, if they're not aware of them, but also that we just really try to, one, make you available to those who are in the service or who have been in the service, who are navigating this world of investing and managing this against their own benefits that they have. Because I think the combination of these things can be like out of this world when it comes to building wealth. And we want people to take advantage of this. We want people, if you're listening, schedule a call with Jacob. Of course, you can come and invest here at Wealthmore, but we like to make sure people are looking at all of the benefits available to them, be it through education, through home ownership, through this 10% savings, which 10% is a nice. People are chasing that through high yield savings accounts and can't get that. If you are saving and that is a way to have nice returns on your emergency fund, or frankly any fund, 10% as a guaranteed return is very nice. These are we want folks thinking about this. And if you are married to someone in the service, if you are a parent of someone, nudge.
Yeah, for sure. And one other benefit I want to mention before we go today as well is the Service Members Credit Relief Act, or they call it SCRA. So this can lower interest rates for service members. So one of the big keys to building wealth is getting rid of unnecessary debt, high credit debt, or high interest rate debt, I should say. And so one good way to do that for service members is getting your rates lowered through SCRA. A lot of times their credit cards can get lowered to like 6% or things in that area. That's another benefit members have. So if you're one of the service members that's working on paying off debt before you can, kind of start investing, that's a
Yes.
huge benefit as well.
Yes. Let's double click on this one. See, this one I actually know something
You were
about.
in the
So
credit
for
industry, so you are familiar,
yes,
more might
this
be
I
more
know
familiar than
something
me.
about. Please take advantage of this. And I know it's been a while since I've been in the card space, but I did run a $22 billion credit card portfolio, and we had requirements to actually go against the government database and see the folks that were active, that were deployed, and to automatically reduce their credit cards. A lot of times it was down to that certain states had additional benefits where it could go down to like zero for a period of time. And it's not just your credit card. Certain states have benefits that even apply to your mortgage. So if you are, I don't know if everyone is required or if every financial institution goes out there and checks against the database to see who's active and who's not. But if you are listening and you know that you are going to be active or you're currently active and you're not taking advantage of that, think about this. The average credit card APR is somewhere in the low 20s, 24, 25 versus 6%.
Yeah.
Please certainly take advantage of that. Don't overpay. If there are adjustments that can be made to your home, look into those benefits as well.
Mm-hmm. And I think the rule is typically if you accumulate the debt after you were already in, then they're not required to lower the interest rate. But I do know
Yes.
that a lot of companies will do it voluntarily just because they support the military community. So it never hurts to just ask. Because even if you got the credit card after you got in and you ran up the balance and now you're needing help getting it paid off, go ahead and ask. All they can say is no.
Yeah. Yes. And I will tell you a little nuance of that. It's really hard for them to sort of track the balances. So a lot of times they will do it because, frankly, it's just easier.
Too much work to determine when the debt was accumulated.
It's too much, and to do the calculation and to do all these nuances on the statement. So, to Jacob's point, just ask. It doesn't hurt at all to just say, hey, can you do this for everything while I'm away?
Exactly. And then I don't know how much time we have, but one other thing I was going to mention is kind of taxes.
Yes.
So there are some tax breaks specifically for military. So like traveling, PCSing from base to base, those costs that you incur over what the military covers can be covered. But one of the things that's kind of less talked about is the savers credit. So if you save in a retirement plan, that could be the TSP, it could be an IRA, you can get a credit for doing that. But typically that's for much lower income. So most people don't qualify for it. But because military pay is heavily geared towards benefits, so you get a housing allowance, you get a food allowance, your health care is all covered. And so a lot of your income is in benefits that don't count as taxable income. So really,
that's awesome.
Your base pay is it. So like a E4 that's got a couple years in, they may be making like 36,000, which is not a high income. You may qualify for that tax credit. And if you're not saving in a retirement plan, you may just completely miss out on it, which I think the max credit is 2,000, which is 50%. So if you put in 4,000, you can get a credit of 2,000. So basically the government's giving you money to put into a retirement plan. So that's a big one that I saw a lot of people missing out on. And then the other one, kind of going back to Roth. So if you're, one thing that I saw occasionally would be service member, married, maybe a couple kids. Because they move around a lot and because childcare is expensive, a lot of times the spouse that's not in the military will choose to stay with the children.
Yeah.
And so the income for the household is very small for a household of four. Yeah. So you typically end up paying no tax because if you're getting 2,000 per child for tax credit, most of the time that's enough to cover any tax liability that you might have. or it's even enough where they're getting that full credit back. But then as I'm going through their finances, I see, wait, you're putting into the TSP, but you're doing it as a traditional contribution. That tax, that essentially pulling that out of your taxable income is not helping you at all because you're already paying zero. So I saw that occasionally because I don't know if it's still the case, but the TSP, when they auto enroll you in traditional. You have to specifically opt into the Roth. But a young, like, airman, Army, I mostly worked with airmen when I was a financial counselor, so I'd see them come in, and I'd always check that because I'd be like, you're probably not paying much in taxes, so it's not helping you to deduct this. Put it in Roth, go ahead and pay the tax on it, but you're paying zero.
It's so tiny. Yeah. Wow.
So taxes are the big one too.
It's so amazing to me, and I'm glad you talked about people moving around so much because I don't want to make light of that because it is hard for people who don't have that to stay on top of their wealth building and keep things top of mind. And our service people are not just moving, but they're getting sudden orders that are disruptive to your lifestyle. And they may be going into places that are quite dangerous. What is your advice to helping people sort of stay on track, just knowing that their day-to-day is very different?
Yes. So yeah, one of the big things is to help with that. It's not going to necessarily lower the cost, but it could lower the impact of the cost, is having enough on the emergency fund on hand. Because while the government does cover the move, they don't cover everything. I did a period of time at a base in England, and when you move OCONUS, I don't want to use too much military slang, OCONUS is outside the continental U.S. If you move outside the continental U.S., the government will pay to ship all your housing goods over, they'll pay to ship your cars, but one thing that's not included is pets. Well, nobody wants to leave their pets behind, but it can be very expensive to ship your pet overseas. There was a family that I knew specifically there. They had 2 German Shepherds, and it was about $9,000, or 2 German Shepherds and a cat, I believe. $9,000 to get those pets shipped over. Like, you get orders, you don't have any.
That's pricey.
Yeah, the heavier the animal, the more expensive. So, you don't have any choice. Like, the government tells you go, you got to go. And then you got to decide, am I going to bring my pets and pay $9,000, or am I going to set up alternative arrangements? So, having savings on hand, because I had seen people come over there and they've had to put that kind of stuff on credit cards, which then now you have a high interest rate that you're having to try to pay off.
Yes.
In addition to paying off the cost. So having a decent amount of savings to cover the unexpected expenses or the non-covered expenses as you make these moves.
If there are any folks that have any pull that are listening with pull in DC, I do think pets should be covered. Pets are family members. They're probably pretty helpful towards comfort and mental health during a big move. So cover the pet.
That's changed by now, but that was the case when I was helping folks about 3-4 years ago. And then another thing with PCSing is kind of the decision to rent or not to rent, which if you don't plan on being, or if you don't want to be a landlord, it's probably not best to buy a house if you're only going to be in a location for 2-3 years. I think general rule of thumb is kind of 5 years, but that's not exact. I mean, 4 to 5 years, you'd probably be all right. And it depends on the market as well, like the area that you're in. If houses are increasing in value quite a bit, it might make sense to buy a house for 3 years and then sell it when you leave. I know some service members, they'll buy a house at every location and then rent them out when they leave. Yeah, and that can be a good wealth building strategy. But if you're like me, I don't want to be a landlord. I don't like the hassle. There's also a lot of liability with that, because if you do a VA loan,
you're not on site.
Yeah, you're not on site. Your management company's handling it. And if you do a VA loan, it's not allowed to be put in an LLC. So then any liability is personal liability. So it's a lot to think about.
Yeah, that's a big one.
Yeah.
Well, the other thing I definitely, for some folks who might come across this episode, you might be familiar with Jacob in the Wealthmore app. outside of Jacob's wealth of like military financial coaching knowledge and just overall CFP, Jacob leads our balanced portfolio. You'll see plenty of posts from Jacob on estate planning. I know that's one of those big passion items for Jacob. And if you're in the military, estate planning seems like a smart thing to think about doing as well. But this is just us giving you a little bit of things to do to really ensure that you and your family are set up for success. There's way more involved, but I know I heard a lot of great to-dos here. I saw a lot of numbers that could add up to major wealth.
For sure. You triggered a thought of one more benefit in the military. You can get the JAG to do your will as well. Talking about estate planning, that could be a savings. I don't know if that's always the case, but I know definitely if you're deploying, they will be able to do the will for you through the JAG office. But power of attorney and those kinds of documents as well. There's really no reason not to have one.
Yes, that's huge. And Jacob, do you want to touch on insurances? Because so many people either don't have the right insurances or they don't have enough insurance. So many people do not get around to writing a will, which again, I like to say life insurance, things like wills are an expression of love, taking care of those who you love and ensuring that in the event that something bad goes wrong, your loved ones are cared for. But would love to hear if there are things around insurance that could help service members as well.
Yeah, so one benefit that we didn't cover as well is the life insurance that that you can get through the military. It's not a free benefit, you do pay for it. The service members group life insurance, I believe, goes up to 450,000. And you can choose how much you want to be covered from 50 up to the max in increments of 50,000. And then they just deduct it from your paycheck. And one of the benefits of that specific life insurance is that a lot of commercial policies will have a war clause. So if you're killed in an active war zone, things like that, they won't pay out the insurance, but the military SGLI insurance will. So if you've declined that coverage and you have dependents or you have family members that rely on you for income, or even if you want that to go towards covering burial benefits or things like that. So it's definitely something you should consider to sign up for. And if you have dependents that are relying on you for income, then definitely you probably should max it out.
Life insurance, if you have anyone that depends on you, whether you are in service or, and we could do a whole episode on life insurance and some of the taboos that people have about it. Oh, it's bad luck. I've heard it all. I mean, I've heard it all. It's bad luck to get life insurance. It's bad luck to do a will. I can tell you guys, I've had them forever and a day. I'm here. I didn't trip. Nothing bad happened. But it gives your family, it gives you peace of mind. Please take advantage of all these benefits. It can really, really set you up for success.
For sure. Yes. And, depending on your family size, how many folks are relying on you, the SGLA may not be enough, and you can always supplement that with additional coverage. Just knowing that it potentially wouldn't pay out if in the event of a combat zone fatality or whatever. But additional insurance is always a good idea too, depending on need.
We're going to have to do a whole episode because there's so many myths about life insurance. Like, folks, you can have multiple policies. You could have gotten a policy in your early 20s that was based on however you were making. You can get another policy. You don't even have to go back to the same firm to up the coverage if that becomes too pricey. Like, there's just so many like misconceptions about that.
Complicated. Then you got whole life or permanent versus term, and then you've got within the permanent, you've got universal, you've got whole, and then you've got variable universal, and there's a lot of different things, and it can be confusing for sure.
And just like investing, where we just want you to get started, when we get to insurance, and if you guys have insurance questions, please go to wealthmore.net, schedule one-on-one. A lot of this stuff depends, but there are very easy ways to get started. I always like to tell people term life, easy way to get started, to get some basic insurance going without feeling like you have to become the encyclopedia of life insurance.
For sure. Yeah, any coverage is better than none.
Exactly. Guys, this was an eye-opening episode for me. I'm so grateful for Jacob, one, being on the team, having this breadth of knowledge, but also spending some time today for us to just share the gems, share the wisdom, help people make sense of all the different benefits, and hopefully not overwhelm you. Just show you the vast opportunities in which you can build wealth, build it faster. I know folks are often being deployed and moving around, but I'm a big believer in auto investing so that you can habituate and not forget. And certainly just taking the time to, if you have debt, get it into the lowest APRs, taking advantage of things like the matching program. Matching is just the bare minimum. What you want to do is maximizing your contributions,
For
right?
sure.
The match is the minimum.
That's
What
the
we want to
starting
do
point.
is just the beginning, just the beginning. Anything else you want to leave folks with, Jacob?
I guess just one more tip that you made me think of about automation. With Pay, you can set up allotments, and that can be to any company. So if you wanted to invest with Wealthmore, you could set up an allotment directly to, or wherever you're investing or saving. If you have a savings account, allotments, it gets taken out of the paycheck, directly sent there, and it's an easy way to save and invest for the future. But yeah, it's been great.
That's a huge benefit. Yeah, guys, double click on that one. That's a huge benefit, just to know that you can do that, that you can set aside $100, $200, $300, and just have that be working for you. I like to say your money should work harder than you. Please think about investing. Think about the many different benefits that are out there. Don't forget them. Take the time. Here we are, early January. Now's the time to set it up.
New Year's resolution.
Absolutely.
Set it on autopilot.
Absolutely. Absolutely. Well, thank you guys for listening. We hope we shared some gems, some knowledge, things that you may have not been aware of to get you on your wealth journey. As always, you're welcome to come build your wealth here as part of our Wealthmore community. Jacob leads our balanced growth, leads our Men Who Wealth community, and a number of different ones. If you go on the website, you can see all the different communities where you can find and follow Jacob. And we'll see you next time.
Yeah, thanks. It's been great.
Thank you.